United States Antimony Corp, ticker symbol UAMY, has been on a roller coaster over the past 3 months. Starting at just $2.83 in mid-July 2025, the stock skyrocketed to an astonishing $13.93 by October 10th. That's a jaw-dropping 392% gain in a short period. However, this surge wasn't smooth. There were sharp pullbacks and plenty of volatility along the way. As of now, UAMY trades at $12.21, showing signs of consolidation after its massive run. The overall trend remains bullish, but recent price action hints at a possible short-term correction ahead. Volatility has been the defining feature of UAMY's recent performance. The stock experienced multiple sharp pullbacks even as it climbed to new highs. This kind of price action can be nerve-wracking for investors, but it also creates opportunities for those who can navigate the swings. The current price consolidation at $12.21 suggests that the market is taking a breather, possibly preparing for the next big move, whether up or down. Trading volume tells its own story. On September 23, 2025, UAMY saw a peak volume of over 29 million shares as the price surged to $7.30. Just a few weeks later, on October 10, volume hit its highest at nearly 36 million shares as the stock peaked at $12.21. These volume spikes during upward moves indicate strong buying interest, possibly from institutional investors. However, such high volume at the peak can also signal exhaustion, hinting that a reversal or correction could be near. Looking at moving averages, UAMY's price is trading above all key short-term and medium-term averages. The 5-day and 10-day simple and exponential moving averages are well below the current price, confirming a strong bullish trend. Even the long-term 200-day averages are far beneath, reinforcing the uptrend. A classic golden cross is in play, where shorter-term averages are above the longer-term ones, a textbook sign of bullish moment. Momentum indicators are sending strong signals. The Relative Strength Index, RSI, sits at 88.83, deep in overbought territory. The Stochastic Oscillator and Williams percent are also confirm this, both hovering at levels that typically precede a pullback. While the MACD remains bullish, its histogram is showing weakening momentum. These readings suggest that while the uptrend is strong, the stock may be due for a breather or even a short-term correction. Volatility is running hot for UAMY. The average true range ATR, at $1.01, signals that large price swings are likely to continue. Bollinger Bands show the price trading well above the upper band, which is a classic sign of overextension. This means the stock is moving faster and further than usual, often a precursor to snapback or correction. Traders should be cautious when volatility is this elevated. Trend indicators paint a picture of strength. The average directional index ADX at 51.67 is well above the threshold for a strong trend, with the positive directional indicator, plus DI, dominating the negative DI. The Arun indicator is also at its maximum, with Arun up at 100 and Arun down at 0, confirming a powerful uptrend. These readings suggest that despite overbought conditions, the underlying trend remains robust. Volume-based indicators offer a mixed outlook. On balance, volume OBV shows steady accumulation, which is a bullish sign. However, the Chaikin oscillator is negative, hinting at a possible divergence. This means that while volume has supported the uptrend so far, there are early signs that buying pressure may be waning. Traders should watch for further divergence as a potential warning of reversal. Look at linear regression analysis reveals that UAMY is trading significantly above its predicted value. The regression slope is positive, confirming the uptrend, but the actual price is $4.44, or 57% above the regression line. This kind of deviation is rare and often signals that the stock is overextended. When prices move this far above their trend line, a correction or pullback becomes increasingly likely. Given the current overbought and overextended conditions, the forecast for the next trading session is cautious. The stock is likely to open lower, possibly in the $11.80 to $12 range. After such a massive rally, profit-taking could pressure the price downward at the open. This doesn't mean the uptrend is over, but it does suggest that a short-term pullback is on the horizon. Key resistance levels are in focus. The all-time high of $13.93 is the most significant barrier, with a psychological level at $14 just above. These levels are likely to attract selling pressure if the stock approaches them again. Breaking above these points would signal a new leg higher, but for now, they represent tough hurdles for the bulls. The downside support levels are crucial for gauging risk. The nearest support is at $10.04, which has acted as a consolidation level recently. Below that, $8.40 marks a previous breakout point, and $7.30 is a volume-based support. If the price falls through these levels, it could signal a deeper correction. For now, these supports provide a safety net for the ongoing uptrend. UAMY's current price of $12.21 sits $1.72 below resistance and $2.17 above immediate support. This narrow range suggests that upside potential may be limited in the short term, while downside risk is also contained by nearby support. The market is in a wait-and-see mode, with traders watching closely for a breakout or breakdown. Based on the ATR of $1.01, the expected daily trading range is about $2.02. If bullish momentum resumes, the intraday high could reach $13.23. On the flip side, if profit-taking accelerates, the low could dip to $10.19. These estimates help traders set realistic expectations for daily price movement and manage their risk accordingly. The bullish scenario, UAMY holds above the $10.04 support and manages to break out above the $13.93 resistance. If this happens, the next target could be in the $15 to $16 range based on Fibonacci extension levels. This would represent a continuation of the strong uptrend, rewarding those who stayed patient through the volatility. On the bearish side, if UAMY fails to hold the $10.04 support and the MACD histogram confirms a reversal, the price could fall toward $8.40. This would represent a 50% retracement of the recent rally, a common correction level in technical analysis. Traders should be alert for signs of weakening momentum and be ready to act if support breaks. Third possibility is consolidation, where UAMY trades in a range between $10.04 and $13.93. In this scenario, volume would likely decline as momentum normalizes and traders wait for a clear direction. Consolidation can be a healthy pause, allowing the stock to digest gains before the next big move. Sum up, UAMY is in a powerful long-term uptrend but is extremely overbought in the short term. The stock is trading 57% above its linear regression value, which is unsustainable for long. Key technical indicators like RSI, stochastic, and Bollinger Bands all warn of an imminent correction. While the broader trend remains bullish, a pullback to the $10.04.10.50 area is likely before the next upward move. Traders should keep a close eye on the $10.04 support level. Taking profits near current levels may be wise, especially given the overbought signals. Waiting for better risk-reward entries such as near $10.50 could offer a safer opportunity. Watching for divergence in MACD and volume will help spot early signs of a reversal. Given UAMY's high volatility and speculative nature, risk management is critical. Using strict stop losses below $10 can help protect against sharp downturns. The amplified risks mean that only those comfortable with large swings should consider trading this stock. Always have a plan and stick to it, especially in such a fast-moving environment. UAMY's recent surge is a testament to the power of momentum in the stock market. While the long-term trend remains bullish, the current overbought conditions and extreme price extension call for caution. Whether you're a trader or investor, understanding the technical landscape can help you make more informed decisions. Stay vigilant, manage your risk, and be prepared for both opportunities and challenges ahead.